Want to master a 5-minute trading strategy that delivers consistent profits without the hassle? Stay tuned because I'm about to reveal an easy to follow method that works for beginners and pros. But before we continue, let me introduce you to my free Telegram channel. You can find the link in the description below or in the bio. If you find the link in the bio, you can click on the link, then it will take you directly to my free Telegram channel, where you will find daily entries, free entries, and also free mappings, daily analysis. You can join so that you can't miss out. Really, many people are making some good money following my signals. Now, without wasting too much time, let's get started. Before trading a 5-minute strategy, you have to identify first 3 things. The first thing is the time frame that you are in. The second thing is the direction of the market. And then the third thing is the confirmation. So let's start with the first thing. We check if we were in 5 minutes chart. And then this is gold 5 minutes chart. And it's the one that I'm giving examples to. And then we are checking for the direction where the market is heading. We are seeing that the market is breaking higher highs and creating what we call BOSs. A BOS is a break of structure, to those who don't know it. So when the market is going up, breaking each high, then it's creating a BOS. That means that the market is creating higher highs. So that implements and shows us that the market is in an uptrend. And that's the first confirmation that now we have. That now the market is in an uptrend. So we know the direction of what? Of the market now. So let me mark this as BOSs. BOS. And also this is a BOS. So this is really showing that the market is in what? An uptrend. So the market is breaking to highs. After doing this and failing to break the last low, because the market shows that was from a higher high, dropping. Now the market failed to do what? To break a last low. And this is my change of character here. So this is my change of character. And then the market retested. Then the market retested to take all the liquidity that was here, this side. All this was liquidity that was left behind to be swept. So the market came and swept all the liquidity here. This liquidity was taken by this. So this is also a sweep, because many people think that sweeping liquidity means that it's a wick that is going to show up. But also full body can show that the market has swept the liquidity, because this retracement was in to get the power of this liquidity so that it can continue up. So when the market moved, had to break the structure, then retested into this order block, again moved, broke the structure. So we are in 5 minutes, and what we are looking for is an entry. We are looking for an entry that will give us a good trade. So we are seeing here, when the market moved and broke, it left what we call imbalance or fair value gap. You can check my recent videos that I put these things of fair value gaps and imbalances that I taught them. And then you can like, share, so that many people get to understand that. So after breaking here, then we are waiting for the market to come back here to take all this imbalance, and then the liquidity that is left also here, and then market moves. So as I told you, in these videos that I post on YouTube, they are not too detailed like the ones that are in my mentorship. In my mentorship, you learn deeply, and you understand. And I also tackle the issue of psychology, because many people have issue with psychology and they're having too much FOMO. FOMO means fear of missing out. And others are in a trade and they still fear to wait for the take profit to be hit. So all those are the things that I touch on. So look at what happened here. when the market moved, it left imbalance, and then we're having another block here. I think you can see this other block. This was the last candle before breaking. And also this one is another block. But this one should be an inducement because the market is leaving liquidity here. There's still liquidity here that has to be taken. And this other block was not really mitigated up to its between, or up to its what? Mid part. So let me put this by at least this line to be in what? In this mid. So let's play out this and we see how the market came to this zone. So when the market moved, I think you can see what happened. Market is leaving liquidity behind. Too much liquidity behind is left by the market. Market swept the higher liquidity, the upper liquidity with this week. And again, it is still showing that it's in need of continuing up. But still, there was totally a heavy resistance that could resist the market. So after the market is breaking this candle with this full body, it's showing that it's dropping. But it hasn't reached here, and we are still having what? Liquidity all around here. So let's wait for the market and we see what the market does. Market dropped. Market dropped, only hunting for liquidity that is left that side. And I think you can see all this liquidity is being hunted by the market. So market came, took the liquidity with this week. I think you can see what happened. After taking this liquidity, it's leaving more liquidity back because it has just tapped into the what? The imbalance. But we haven't yet entered into this buy entry because that is a buy zone. Market again moved up, took all the highest liquidity that was left here. This is the buy side liquidity that was swept by that week. And here were equal weeks. And that implements too much liquidity that side. Those are stop losses for the retail traders who don't know what to do in the market. And we just take them out. So this is a liquidity sweep. Market swept out the liquidity. And then let's see what happened here. Market, after sweeping that liquidity, it tapped into this demand candle and then moved up, which is still fine. We are waiting for our entry still. So this was a BOS here and still leaving what? Liquidity down. So we are waiting for the market to come and take the liquidity that is left down. Let's go with the market and we see where it heads to. And then the market moved. Market continued dropping from that side. And then I want you to see this. When the market moved and broke this high, again, it broke this internal low. This one, this low. Because this was a low, and then market failed to break it out, and then instead broke it inside here, creating a change of character. And then this candlestick became our order block because there was imbalance. And then when the market reversed to that side, it had to drop, breaking the low. So there are many things that you guys will have to learn and have to understand. And sometimes someone may just watch these videos and think that they have understood everything, and then they go tomorrow, it works for them, and then another day it doesn't, because you don't have the full package of this. So we are waiting for the market to hit where we want it to hit, and then we take an entry. So I think you see what happened. The market continued down to this side. It's coming to our what? To our order block. So when you're entering these order blocks, sometimes you have to wait for the market to come and reach into the zone so that you can take an entry. And sometimes you can just set a buy limit or anything, pending orders, those things that you like doing. Me, I just enter a market at the exact moment because the market can change at any time, anywhere. So that's why I recommend people to really trade with the market. Face the market. Don't play with the market, bro. So when the market reaches into this zone, let's see what the market does. Market taps into our zone. So here is an entry. An entry, I just go to 1 minute chart and then takes an entry. And now when the market reaches into our zone, we are looking for a buy entry because we are in the buy zone. And what you have to do is to go on 1 minute chart. You just don't have to take a trade because you have seen the market dropping into your zone. But when you reach into 1 minute chart, you know what to do, what to risk. Now I want you to look at this entry. This entry is targeting the last what? The last high. I think you see, this is the last high. Huh? The last high is giving us approximately 110 pips. And we want to risk something too little, something like 10 pips. Yes, that's a bigger amount to my side. 10 pips for what? For what? For 110 pips. So I want you to look at this, how the market plays out into the zone. The reason as to why you put that far, because the market may play out like that. And now you see what the market does is in the zone, and then the market moves. Let's see what it does. Now there's a change of character inside here. On 1 minute, you can see it on 1 minute. Then you wait for the market to retrace and then you enter. Or you enter like as I have done because I know what I'm doing. So look at this. Let's see what the market does in this zone. After tapping to the entry, the market continues, plays out like that. And then I want you to look at that. Look at that, guys. Look at that. And then the market, boom, hits the TP, the last take profit. Now, look at this. If you had waited for the market to break like this, and then you enter on a retest like this, was too good also because we had imbalance, and then the market had another block here, and then you could take an entry. So here was also a what? Was also our first take profit and our last take profits, because may I give 2 take profits. Now, imagine you could make that good money that day, guys. All right, guys, more lessons, more things. And then don't forget to join my free Telegram channel. The link is in the bio, as I've told you. And also you can check in the description. And then let's make this roll, guys. Let's make this roll. So don't miss out, guys. Don't miss out. Let's make it out now, guys.